Hey, welcome back to the Mining Pod presented by Cleanspark. On today's show, we're going to be discussing hash price with Nick Hanson of Luxor. Then we're going to be going over to MicroStrategy and discussing their new rules around the MSTR dilution. We're going to finish up with Riot and Bitfarms, Applied Digital, and of course, land the plane with Yeezy's new coin launching on the Solana blockchain. Stick around. Got more for you just after word from our sponsors.
You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
What's up, y'all? Welcome back to the Mining Pod. We've got a news roundup this week with special guest Nick Hanson, CEO of Luxor, the usual suspects Matt Kimmel, Colin Harper, and Will Foxley. Brought to you by Cleanspark. On today's news roundup, we will be going over some Terawulf convertible note news and Google's upsized stake in the company. We're going to be talking about MicroStrategy's updated guidance on when they may or may not issue new shares. Trust me, bro. We've got some news on Applied Digital's new 280 megawatt deal, Riot offloading more Bitfarms shares, and then the man himself who cannot stop just dancing into the limelight, Kanye West and Yeezy coin. Yes, we're at that point in the cycle. But we're going to kick it off, as always, with a difficulty and mining metric update from Hashrate Index, brought to us by our friends at Luxor. Mr. Kimmel, what are we seeing in the mempool?
Well, for the YouTube listeners, you got it up on the screen right now. Hash price has taken an absolute tumble in the last week since we last spoke. And really, it's all price action, right? We're sitting, Luxor's got us at 112,836 right now, the Bitcoin price. We're getting pretty close to the next difficulty adjustment, 91% of the way through the epoch. And hash price is sitting at $55 and change dollars per petahash second per day. I believe we're at difficulty all-time high at the moment, after the previous adjustment, which was up about 1.25%. Fees are still dry. Nothing much else to note there. Actually, I believe Luxor just released a report, so maybe Nick will have some commentary on that. But that's really the story, gents.
So Galaxy actually was the one that released a pretty interesting article quickly on hash rate and kind of where we're at. It feels like 4CP in Texas. It's kind of like holding a ball under the water. Like as soon as you let it go, it's going to go flying out. I'm sure we've all done that over the hot summer days, but I think that's kind of what we're seeing here is like 4CP seems to really be holding down hash rate, trying to kind of keep the ball under the proverbial water. But I think as soon as that's over, we're going to see that pop up, and so we'll definitely go blowing through that 1 zettahash mark. Yeah, actually, and then on the fees point, Galaxy, if you guys haven't seen it yet, they just released this today. The title is "Where Did All the Fees Go? Analyzing Bitcoin's On-Chain Activity and UTXO Set." Basically, walking through kind of like what has happened since the halving, where fees were kind of at all-time high levels, or at least what do you call it, a local top, and then pretty much it's been down only technology ever since, dropping by over 80% since April of 24. But ultimately, they're kind of just walking through like what does this mean for miners? Is there a catalyst on the future? They kind of talk about the potential migration from legacy addresses, being a catalyst. If for whatever reason like quantum resistance, or if there's ever like a quantum attack, there's a bunch of transaction UTXOs that'll need to be moved over to quantum resistant addresses. So that could be a pretty big catalyst for transaction fee volume for a while. But those are still more flash in the pan type of events, similar to like ordinals and runes, where it was like everybody's going crazy for ordinals and runes. I guess if a quantum attack ever does come to fruition, there will be like a mad frenzy of people trying to get their Bitcoin into new addresses that are resistant. But that's, again, it doesn't have staying power. So really the point of the article or the research piece was to kind of walk through what does Bitcoin look like if fees don't really pick up, and then they kind of talk about some of these bearish catalysts for fees, meaning it seems like folks are generally okay trading paper Bitcoin through ETFs or treasury companies as opposed to on chain where that would generate fee. We're sort of moving the economic activity off chain, which is definitely a concern. So if you guys haven't seen it, go check it out. It's called "Where Did All the Fees Go? Analyzing Bitcoin's on-chain activity and UTXO set." So go check that out. And yeah, that's all I've got on fees and hash rate. So we can jump into the news roundup.
I got one question. Why do you guys think it all happened after April 2024? I mean, it was on a downtrend and has been, but it does seem to be like sometime around the halving things started to kind of
fees. Yeah, well, that was when runes activated. So runes activated at the halving block, and so that there was all this like kind of degen FOMO to go hit the blockchain and get your runes minted and traded and bought and sold and all this stuff that was happening all on chain on Bitcoin L1, and that actually activated on the halving block. So that was the reason that all happened right around that time. There was a bunch of folks that were kind of front running. They were trying to like get themselves ready. So there was some activity before the halving actually occurred. So they were splitting up UTXOs, getting their ordinals wallets ready with unspent transactions or UTXOs that they could then use for runes activity after that, getting their wallet set up. But and then once the halving block happened, there was all this frenzy for it was actually a couple weeks, and then pretty much has just been trailing off ever since.
So runes killed the ordinals market.
Well,
you heard it here first, right? Everyone.
I don't know if it was runes specifically.
No, it was just dying out at that point.
Ruins
was like
ruins. Yes.
Way too much ruins talk for a mining podcast. Terawulf offers 400 million convertible note as Google boosts stake to 14%. Fluentstack expands its lease. This is on blockspace.media. Go check out our articles and click below. You can join our Telegram chat. I'll just read off on this first part. This was beginning of the week on Monday when the announcement came out. The first part of this announcement was the week prior. I believe it was Thursday of last week. And this is just an extension on it. Quote, Terawulf unveiled plans for a private offering of a 400 million convertible note due 2031. The announcement came alongside news that AI cloud platform Fluentstack had exercised its option to add 160 megawatt CB5 lease at the company's Lake Mariner data center campus in Western New York. Google increased its stake in Terawulf to 14%. Separately, Fluentstack's CB5 lease. CB5 is one of the sort of like mini campuses, if you will, at Lake Mariner. Adds an incremental 160 megawatts of critical IT load to Terawulf's Lake Mariner campus, with operations slated to begin in H2 2026. In support of project-related debt financing, Google will provide an additional 1.4 billion backstop and receive warrants for 32.5 million common shares, raising its total backstop commitment to approximately 3.2 billion and boosting its pro forma equity stake in Terawulf to roughly 14%. I'll pull up TradingView for this guy in just a second here. I believe this pushed the market cap. I don't want to say it quite yet because I might be wrong, but I thought it was over 3 billion. Anyone can correct me on that, but brought it over $10 a share, a place that Terawulf has not been in quite a while, if not ever. And I think this is one of the first deals with Google directly for Bitcoin miner, if only deal out there for hyperscaler. I want to throw it to Colin first, get your take on this one.
Yeah, so just a quick fact check. You're right. Terawulf is 3.6 billion market cap after this. And I just think, it's been incredible to see news like this when a lot of the focus has been on Core Scientific and CoreWeave and some of these other miners who are doing AI and HPC pivots. And Terawulf had been pretty quiet. They announced the Core 42 deal, and then now they come out with this. It's pretty impressive. And it is the first Bitcoin miner that I know of that has signed a deal with a major like Google. Nick, any commentary with this?
Yeah, so this is definitely the kind of talk of the town right now. It actually did eclipse 4 billion even at some point. So market loves this. Of course, this has been the story that all these guys have kind of been telling. That Iron and WULF and all these guys have kind of been saying, hey, we're gonna get ready for hyperscalers. They're gonna come do big deals with us, and that's why our equity is really interesting. We're being valued based on the amount of energy that we have, the amount of power that we have access to, not really on the mining per se. Of course, mining is a great way to monetize that energy in the interim, but they're really now starting to be valued based on their access to watts and what I call high quality watts that can be used for AI HPC. I'm sure you've heard me or other folks say it before. Not every watt is generated equally. One that's in sub-Saharan Africa is a lot less useful for AI HPC because doesn't have great connectivity to population centers where on the eastern seaboard where the majority of Americans live and a lot of the high tech stuff happens. Those watts are very, very valuable. And so, of course, their site being over there on the East Coast, Google definitely seemed to think that this is a high quality site that they'll really be able to utilize. And I think we're going to continue to see that play out. So WULF, doing a great job getting out in front of it. And, obviously shareholders are happy about it because they're up, almost 100% since the trade.
Yeah, great trade for them. For Fluidstack, people might be wondering who they are. And there's a lot of these AI names that I think on the infrastructure side we're all becoming familiar with. Per Crunchbase, Fluidstack is a GPU cloud for AI companies. They work with companies like Meta, Character AI, Midjourney, which probably a lot of people are familiar with Midjourney. That was one of the first big standouts about 2 years ago. Also Poolside. So they're pretty big in Europe. That's mostly where they're operated. They're actually based out of London. And my understanding is a lot of their work to date has been in France and Italy. So it's interesting to see them sort of jump into the US market here. And it makes sense. On the Bitcoin mining side, we did the podcast with Nas over at Terawulf in May, push people to go check out that one. And this sort of fulfills what they've been focused on executing, the PowerShell model. Let's get an awesome lease somewhere with great, cheap power. Let's build out a campus that someone can come in and fix up for whatever utility they want to end up doing. In this case, Fluidstack obviously wants to drop GPUs in there or have people who work with them drop GPUs in there. It always seems to be layers to the cakes.
Alrighty, so strategy updates, its common stock, MNAV guidance after 2 weeks. So readers of Blockspace may remember that strategy came out 2 weeks ago with this announcement that they were not going to issue any more strategy common stock whenever the stock was below 2.5x the net asset value of the Bitcoin they hold, except to pay out dividends for their preferred shares. They've got 4 of these: Strife, Stride, Strike, and Stretch. But now they're backpedaling it just a little bit and saying that we will also do it when otherwise deemed advantageous to the company. So kind of like a trust me bro moment. We're only going to do it when it's accretive to shareholders. We wanted to highlight this, I think, because the original announcement kind of sent some ripples through the strategy community, and people were getting a little bit giddy about the idea that they weren't going to get diluted anymore. But they had to obviously backpedal it pretty quickly because ultimately they're going to need that liquidity if they need it, and they can't really say that they're not going to do it if their MNAV is under a certain multiple. But I don't really have too much else to say on this story. I just thought it was kind of interesting. And also the kind of, the thing lurking in the background here is like, even the original release was like, okay, you're still going to have to dilute because you have to pay out these dividends for these preferred shares.
I think we got to let one person speak for all of us.
Michael Saylor comes out and tweets this. I don't know if you can read this, but let me just share what it is. Strategy today announced an update to its MSTR equity ATM guidance. Basically, what he ends up doing is he changed and flip-flopped on the terms that he stated only 2 weeks ago on his earnings call. Now, when the MNAV is below 2.5, MicroStrategy will tactically issue MSTR stock to pay interest on debt obligations, fund preferred equity dividends, and 3, when otherwise deemed advantageous to the company. 2 weeks ago, he said he wasn't going to do that. Now this? Before I continue, I just want to make it abundantly clear that I am not suicidal, yet despite what my lawyers advised me, I feel that it's necessary to at least speak out on this matter.
That is an amazing clip. That was Get Rich Quick Nick. Choose Rich Nick.
Choose
What's his
rich.
name?
Choose rich.
Choose Rich Nick. What an amazing
Is
guy.
bro okay?
Bro's not okay.
Someone
He's not
check?
suicidal.
Can someone check on our guy over there?
I think this is one thing that is kind of is a microcosm, or like maybe like a good insight into what's happened with crypto Twitter the last 2 years. All these altcoin bags have failed. Everything that was built up from 22 to 23 into 24 has essentially failed. A lot of the big projects have not done well, but MicroStrategy and a lot of those stocks in that ecosystem have done pretty well. So a lot of the flows of funds went there. A lot of the crypto Twitter folk who wanted to, get rich quick this next cycle, put their money there. And now MSTR has been sitting around like 350 to 400 for a while. And a lot of people deposit their bags there while Bitcoin's gone up and some other things have gone up. And I think they're frustrated. And so you see this also interacting with the TradFi market, where, the TradFi rules are almost as brutal, if not more brutal, than the on-chain games you can play. A lot of times, people make fun of like the DeFi ecosystem, where it's like, I can launch a new contract, I can drain a contract. If I'm the founder, I have 2 or 3 multi-sig, and I can do whatever I want. We've seen quorum disputes with DAOs where people have just gotten totally wrecked on their bags. TradFi has similar games, and they can just change what they're going to do with this MSTR issuance based on like what's best for their company. And to a degree, like not a lot you can do. So I love this whole situation we got going on. And I think a lot of people who are bag holders do not. I'm not a bag holder of MSTR, but I'm enjoying watching it. Nick?
Yeah, it's certainly, that's the story right now, right? Everybody's talking about MNAVs. And that's, Choose Rich has been pretty anti that due to the MNAV story. What we're seeing, I know this is a Bitcoin podcast and we want to keep it Bitcoin focused, but what we're seeing, it seems like, is some flows towards DATs that have yield, where, Bitcoin doesn't have native yield. Well, it does have native yield, but it comes in the form of proof of work mining. So you have to go mine it to get that yield. Yield in this case is the emission of new Bitcoins. ETH and Solana and these other staked coins, they do have native yield, where you're validating the network by participating in proof of stake. And so it seems like some of the flows of capital that have been, kind of going towards these digital asset treasury companies, DATs, is now starting to move towards yield-bearing companies like ETH and Solana and some of the others that have native yield through staking. So we'll see how that works out for the Bitcoin treasury companies. There's a couple big ones that are kind of on the way. Nakamoto has just recently announced their acquisition of a bunch of Bitcoin at around 118,000. And yeah, these are, I'm not sure where Naka's obviously very, very new. They still have a chief medical officer from their previous shell, which is interesting.
They're keeping all of the healthcare assets. Like those are going to be operational, which is pretty wild.
Interesting. Yeah. So Mr. Bailey is now the CEO of a medical company and a treasury company. So anyway, there's all these DATs are kind of like, what do we do? How do we generate yield? All that sort of thing. We can't like, farm the volatility the way that, so MicroStrategy's way of like generating yields, like farming volatility, and they haven't been terribly volatile. So anyway, there's just a lot in flux. I don't think DATs are going away. I know there's a lot of people that think they are, but it does seem like they're going to be around to stay. And I'm very interested to see kind of where they end up going, because there's a lot of Bitcoin DATs that are on their way as well that have not started even trading yet. Most of them will start trading like in mid to late Q3 into Q4. So there's more to come. And MNAB is really the story.
But David Bailey just skipped medical school, bought a bunch of Bitcoin, and then bought a medical company. Now he's a doctor. Yeah, that seems to be the story.
Dr. Bailey.
Dr. Bailey.
We are Cleanspark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Okay, let's go over to this Applied Digital story. Thanks for popping that one up. Applied Digital stock jumps over 6% on $3 billion data center expansion announcement. I'll get into this in a second, but it is crazy that we have these announcements of data center buildouts and the stock rises quite a bit. We saw this with Bitfarms, where they had the announcement that they're going to work with, I believe it was like T5 data center construction teams. And their stock jumped quite a bit as well. We'll get to Bitfarms in a little bit. Quote, Applied Digital will break ground on new 3 billion 280 megawatt data center, Polaris Forge 2, this coming September in North Dakota, according to a company press release. This was on the 18th, I believe it was Monday. The site, which will be able to scale past the initial 280 megawatts, is expected to begin operations by 2026 at full capacity in early 2027. Price jumped 6.5% up to $16.78 in early morning trading hours. They bought 900 acres, expect to have 200 full-time employees, a bunch of other stuff in there. But I think the main point is Applied Digital, pivot completely out of Bitcoin mining, are just AI HPC. For those who've been in the space for a while, you know that they used to work with Marathon. I think Marathon even had the ability to buy them at one point, and looks like that was probably a miss by them not to indulge in that purchase, or at least consider a little bit more. Applied Digital has had historically a lot of problems. There was some concerns about them surviving, but I think the CoreWeave contract that they signed a few months ago sort of signaled that they have some really nice assets, and now they have essentially more capital and ability to continue building out their data centers up in North Dakota. Nick, any thoughts?
Yeah, nice assets. Good euphemism there, buddy. They definitely are headed in. Everybody's kind of headed that direction. And you kind of made a joke about why did the stock pump on an announcement? Well, the reason we value companies is based on the future cash flows that they may potentially generate. They're basically announcing a new big cash flow line. So it makes sense that the stock would pump on something like that. And so they're definitely headed in that direction. At some point, do we even continue talking about companies that have completely pivoted out of Bitcoin mining? Or do we just kind of follow along and root from the sidelines? I'm not sure. All these companies kind of have their transition plan in place, and it seems like the market is rewarding that. So I don't think they're going to be the last. There's more that kind of wish they could get one of these contracts, I'm sure. So it would beg for a contract like that.
Aren't too many pure play miners left. I don't really have too much to add to this other than it seems like a lot of deals coming out of the woodwork right now. And I think the next year is going to be critical in separating the companies who can actually pull this off from the ones who can't. And then that, raises the question, what do they do if they can't pull this off? Does the company just completely founder, or do you go back to Bitcoin mining? And that's just generally speaking. That's not about Applied Digital or any company in specific.
You look at some of the languishing miners, the ones that never reached like a critical scale, like, they never reached like, let's call it maybe 3 exahash. I don't know if 3 exahash is the number, but it kind of feels, like if you can't quite get to that number, you never like reach escape velocity to like start getting on people's radars. I don't know what you do. It would be like you're in between a rock and a really hard place, because you can't raise new capital because you don't have enough revenue to support it, to service any debt. You can't get debt at great terms. So really, I don't know how you really operate. You have to really start thinking about consolidation in that case. And most likely, I think those mines are going to take a pretty big discount to what they think the fair market value is if they don't really have any aspirations for adding, higher value compute like AI HPC or having like high value, quote unquote, high value watts. So I think we'll continue to see consolidation in the mining space, especially in the low end of the like kind of the hash rate tiers. And maybe some folks have just fully dissolved. They're just like, you know what, we don't really have a path forward. We're going to get a pretty bad acquisition offer if we do go anywhere. Let's just liquidate the company and shut her down.
Speaking of looking for a different path, let's go over to Bitfarms. And Nick, you bring up a good question. Like, at what point do we stop talking about certain companies? Bitfarms is obviously actively still mining, but they have announced that they're putting up about $25 million worth of their ASICs for sale. They are not mining in their Argentina site anymore. Not really their choice, I think, in a lot of ways. It just has to do with doing business in Argentina. It can be a little difficult. And then, of course, they bought all the assets in Pennsylvania, and they are moving quickly and fast towards the AI HPC marketplace. Got their stock price up here. The thing that we're going to focus in on for this story, though, is Riot divesting even more of their stake in Bitfarms. For those who were not paying attention earlier in the year, Riot tried to acquire Bitfarms. Didn't go super hot for Riot. Bitfarms had a poison pill clause and was basically able to force them out, plus some other oddities about operating in Canadian markets. So Riot basically had to jump out of that, and they've been slowly selling off their shares in Bitfarms. I believe they had up to right under 20% of Bitfarms common shares, and now they're below 5% as of this article. Bitfarms stock price has oddly been going up as this sale has been going on. Why? Well, Bitfarms has activated its own share buyback, which I think the market is liking a lot. And then just like the underlying unit economics of actually the mining assets for Bitfarms are really strong right now. And prices at around like 130 a share. I don't know the exact number, but around that. So we've been having a pretty good hold on that number, whereas previously Bitfarms kind of struggled to keep above $1. The last thing I think that I've seen mostly in the banking notes is that there's just a renewed optimism for this company. Over the last 2 years, there's been like a lot of back and forth in management, like what is the direction of the company? We obviously had the CEO get ousted, and there was like a little bit back and forth about like his paycheck when he got kicked out. And so I think for people who are investing in Bitfarms, like what is this company doing? Like where are they going? But there's a renewed direction for them, especially with these nice assets in central Pennsylvania, western Pennsylvania. Nick.
Good one. You did it again. Nice assets. The Riot thing, I think we talked about it the last time I was on, maybe 2 months ago. It was not the last pod, but the one before. You asked about like, what do you think about Riot, their attempt here? And like I said in that one, I'll say it again. It was, it's like you took a big swing. You wanted to, hit the home run, throw the Hail Mary touchdown pass. And if it works, you look like a genius. You look amazing. If that pass hadn't got intercepted at when the Patriots, were playing the Seahawks there, if that pass hadn't been intercepted, it would have been ingenious. You would have looked like a genius, but it did. And then you look like an idiot. So I think this is just one of those cases where, they took the big swing and it just didn't happen to work out. But like if it had, they would own all these assets that are, that do have good unit economics. They would have diversified. It would have made a ton of sense. So it's just one of those things where it didn't work out. Now, as it pertains to Bitfarms and like what they, back to just Bitfarms now, what is their strategy? I think you're right. It was a little unclear. Like, are we going to be an AI HPC, hyperscaler? Like, are we going to go court the hyperscalers? Are we going to be this like diversified Latin American low cost Bitcoin producer? What are we going to do? Well, they clearly set that, their CEO, Ben Gagnon, has clearly kind of stated like what their goals and objectives are for the next period here in the mid to short to midterm. And I think that makes sense. And, it gets you more comfortable with what the equity actually is. Like, what am I actually buying? And now are they able to execute on that? And does that ultimately return value to shareholders? Of course, the buyback is definitely helping as well. And so, it seems like, Bitfarms is a great place to be right now. They've got a direction. Now it's time to go out and execute.
The end of an era, or a saga, I should say, with this story. Now that Riot is sold, their stake is below 5%. They don't have to report any more of their sales. No doubt they'll just continue divesting this position, though. Going back to the big risk, big reward, or big egg on your face, Nick, they spent about $204 million to accumulate 19.9% of Bitfarms' outstanding common stock at the time. Now they've divested about 71.5% of that 90 million share stake, and they've netted about 71.3 million from the sale. So they're going to end up taking more than a 50% haircut on this. Pretty brutal to see.
I mean, I just think it's like they're at an interesting place. So they had the activist investor, blinking the name up top of my head right now. I can pull it up in a second. The activist investor came in with Riot, was like, hey, you guys need to start getting to AI HPC. You have these two huge data campuses, both can get to over a gigawatt in size. Rockdale can get to a gigawatt, right? It's like 750 plus. Then, of course, Corsicana is over 1 gigawatt. So it's like, you guys have these huge data center assets, start pivoting. That pivot happened around early spring, late winter. Before that, they were all in on Bitcoin mining, just like Cleanspark and a few other companies. Activist investors will change your mind. To my understanding, that activist investor has almost fully divested their stake. And now Riot's kind of like, they kind of got like their hand turned by this activist investor, as they do. And it's like, okay.
Yeah, it was Starboard Ventures and D.E. Shaw were the two. Yeah, were the two activist investors there. But like you said, they guided the ship and then jumped off the ship.
Which is brutal. I did a meme at the time when all this was going on, because we had Bitfarms buying, blanking on another name,
Stronghold
Digital, and then Riot going after Bitfarms, and then we had Starboard going after Riot, and just always seems to be a bigger fish kind of eating up. And a few of those things played out pretty well. It looks like the Bitfarms Stronghold one happened well. I'm just going to leave a little note here. I'm wondering if there's anything for Bitfarms in the future. They have nice assets. I know I keep saying that, but they do have that. And I'm wondering if there's other people in the market who are going to take another swing at it, just like Riot attempted to do. Now that the vision is more clear and they're aggressively divesting from Bitcoin mining, I think this might be another opportunity for someone in the market. That's my last thought. Should we go to Kanye?
We got to get to the good story. We got to get to the juicy one.
Yeezy. Got to go to Yeezy. Yeezy money is here, y'all. A new economy built on chain. So if you haven't been paying attention, I don't know why you would be paying attention to this necessarily, but Kanye West just launched Yeezy money. It is a concept to put you in control, free from centralized authority, according to the official website. So yeah, it's issued on Solana. There are just some smaller kind of sketchier exchanges, I think, that you can trade on it now. But the incredible thing is, when I was reading Kanye's tweet, apparently someone tweeted him and said, bro, you own 70% of the supply, which I'd expect nothing less from something like this. But I don't know. I guess this is just where we're at in the cycle, y'all, where we've got yet another celebrity launching a coin. But this is fine now, though, because it's like a meme coin. Remember, when Floyd Mayweather did an ICO, didn't he get fined by the SEC or something like that? He almost went to jail. But now it's fine though, because Trump did it. So I guess everyone can launch a meme coin as long as you're transparent about it.
So Yeezy launched kind of in the wee hours of last night. Started getting some texts and stuff about it, like, "Hey, Vic, what do you think this is going?" It's like, it was at $2 billion. It's at about $1 billion market cap right now. And something like, I think they said 25 addresses held something like 86% of the initial supply. It's down about 50% since it was sent to me about 12 hours ago, or so, maybe 14 hours ago or so. And it started hot, has gone down. I don't know why you need Yeezy money, but whatever, take your financial freedom into your own hands.
For freedom.
For freedom.
For freedom.
Yeah.
because they trying to cancel him, Nick. That's why.
It is. It is. He puts in there that they've got. So there's 30% is listed as 20% for public supply, 10% for liquidity, and then 70% of the total emission remains in Yeezy Money LLC, Yeezy Investments LLC, which is, I mean, that means he has $700 million in his Yeezy Money account now, just out of nowhere. He just printed $700 million. At one point was up to $1.4 billion yesterday. So, not much to say on that other than just general commentary. We are not serious people. We're not a serious industry, and it's just continuing to kind of play that out. But yeah, crime's legal now, man. We can do whatever you want.
I mean, could you just imagine going back to Satoshi and being like, hey, by the way, 16 years from now, a black Nazi is going to create a token and it's going to get bid up to 4 billion.
Yeah. Donald Trump is going to own the crypto economy, and Yeezy is going to launch a coin. So, how far we've fallen from God and stuff like that. It just reminds me, why I'm very much Bitcoin only. I do like the other stuff. It is, it's fun for the memes and stuff. Drives interest. I would say drives interest, makes people aware. I'm sure people that never knew about crypto are like, what is Yeezy talking about?
Right.
Maybe it's good for onboarding, but anyway, here we are.
Speaking of cash out on crime, do you guys see that the Kelsier Ventures guys, Hayden Davis, got their funds lifted? So crime might be completely legal at this point because even the judges are saying you can do whatever you want. For those who didn't pay attention to that story, they're the Melee token scammers.
Yeah, it was called Libra, and it was the token that Milei, the president of Argentina, like they launched a meme coin, and he promoted it as like, this is how they're going to get out of their national debt by buying Libra. And then there was totally a rug pull, and like those guys were part of it. And it, like you said, they had $56 million that had been seized of USDC. I don't know exactly how it was seized, but it was. Doesn't make sense that you could steal.
I don't think it was actually seized, but they did put a freeze on it, is what there was said, but they never left the original addresses.
Still, I don't know how you can seize crypto freeze crypto. If you can freeze crypto, it's not really decentralized. Anyway, all that stuff aside, the judge did ultimately say like he didn't do anything illegal, which I don't really know. I didn't follow closely what their involvement was, but they rug pulled a country and it's totally fine.
Crime season, baby. Crime season.
Anyway, mind Bitcoin, people. Stick with Bitcoin. At least you can't get your money seized.
So true. Okay, we'll wrap up there. We had an extra episode out this morning, so go check that out. Jerome Powell is speaking at the Jackson Hole event tomorrow morning, so we did a podcast on that topic. Go check it out.
Is he going to raise rates?
Yeah, is he going to raise or not? Gotta go check out the podcast, find out what our expert talked about with that one. Volatility trader here in New York. Great show. And then next week we'll have an update on the ASIC marketplace. So if you're interested in what's happening with ASICs, check out our show on Tuesday. Nick, thanks for joining us today.
Looks like rate cut is only down a lot.
Is it?
It was
82% for September.
Yeah, and now it's down to 59%.
Ooh, no, not today. Not today.
I mean, the market has been kind of getting crushed. I shouldn't say crushed, man. We've been at all-time highs for as long as I can remember.
It's
but we have like a 3% correction. Like, oh my god, we got to lower rates.
Yeah, S&P has hit 17 all-time highs in 2025 so far.
I imagine a world where hash price dictates rate cuts. One day we'll get there.
Okay, well,
hash price goes down, we cut rates.
All right,
yeah, we'll close out there.
It's been a good rip. We've had some very interesting news. Lots of public market.
Mm-hmm.
Who would have thought? Now, going back to Satoshi, 16 years ago, who would have thought we would have 30 or 40 public equities that are crypto or crypto adjacent, Bitcoin mining equities. We have come a long, long way since I started looking at, crypto as a whole, Bitcoin mining with
that's a good
GPUs
point
and stuff.
I'm imagining, when Satoshi wrote Laszlo about the GPU discovery, right? He said Laszlo Hanyek is the guy who invented GPU mining and or discovered it, depending on whatever nomenclature you want to use. But he messaged him and said, I know eventually that mining will be dominated by specialized hardware, but I don't want to hasten that day. Imagine just like going back in time and just posting a picture of Rockdale. This is what's going to happen eventually in a lot but this is just one of many.
One of many. Yeah. And we're definitely, it's accelerating, man. It's cool. I know we joke a lot about the different, the little things that happen along the way, but I like to think that we have come a very, very long way in the, decade that I've kind of been around, in the 16 years of Bitcoin's life. So I am very optimistic, even though sometimes the stories make you feel a little pessimistic.
A white pill going into the weekend. All right, we're going to wrap it up. Take it easy, y'all.
Take care, everybody. Appreciate it.